Most people will never make the mental switch I'm about to reveal to you, and that single failure, that one cognitive blind spot, will cost them millions of dollars over their lifetime. Not because they're not smart enough, not because they don't work hard enough, but because their brain is literally wired to miss the opportunities that create generational wealth. I'm going to tell you something that sounds impossible. The difference between someone who builds a $100 million fortune and someone who struggles paycheck to paycheck often has nothing to do with intelligence, education, or even luck. It's a cognitive reorientation, a neurological shift that happens in your prefrontal cortex. And once you understand how this works, once you see what I'm about to show you, you'll never look at money the same way again. Here's what separates billionaires from everyone else. It's not a secret investment strategy. It's not insider access to deals. It's a way of thinking that fundamentally changes how your brain processes risk, opportunity, and potential. The ultra-wealthy have made a shift from scarcity thinking to what I call asymmetric opportunity thinking. And this isn't motivational nonsense. This is a neurologically measurable phenomenon that manifests as dramatically different financial outcomes. Let me be very clear about what I mean. When I say your brain is wired wrong for wealth, I'm talking about actual neuroscience. When you operate in scarcity mode, when you're constantly worried about losing what little you have, your brain literally becomes incapable of recognizing wealth-building opportunities. Your hypothalamic pituitary adrenal axis activates. Cortisol floods your system. Your prefrontal cortex, the part of your brain responsible for rational long-term planning, shuts down. And your amygdala, your fear center, takes over. You enter what researchers call tunneling. You become locked into immediate survival mode. Every decision you make is about protecting what you have rather than building what you could have. And here's the devastating part. You don't even see the opportunities in front of you. Your brain is chemically incapable of recognizing them. Now contrast that with an abundance mindset. When you operate from abundance, your brain activates completely different neural pathways. Your prefrontal cortex and anterior cingulate cortex light up. Dopamine floods your system. The neurotransmitters that enable optimism, creativity, and cognitive flexibility, they're all working for you instead of against you. Your brain literally becomes better at pattern recognition, at connecting dots others miss, at seeing possibilities hidden in chaos that terrified people can't even perceive. This is why wealthy people see opportunities everywhere. It's not because opportunities appear more frequently in their lives. It's because their brains are chemically and structurally optimized to find them. When they encounter a problem, they don't ask, "Can I afford to solve this?" They ask, "How can I use what I have to solve this and profit from it?" That single reframe, that one cognitive shift, creates billions of dollars in wealth. Before I go further, if you're serious about making this shift yourself, if you want to rewire your brain for wealth the way I'm describing, you need to subscribe to this channel right now. I'm not asking, I'm telling you. The insights I'm dropping in this video and the ones coming next week are the exact frameworks that separate seven-figure earners from nine-figure earners. Hit that subscribe button. Like this video. Because what I'm about to reveal doesn't just change how you think about money, it changes how your brain physically processes opportunity. And if you're not locked in, you'll miss it. Let me tell you a story that perfectly illustrates this cognitive divide. It's about two entrepreneurs who faced almost identical opportunities at the same moment in history. One became a billionaire. The other became a cautionary tale. And the only difference, the only thing that separated their outcomes, was this mindset shift I'm describing. In the late 1990s, both entrepreneurs were building internet companies during the dot-com boom. Both had solid business plans. Both had technical expertise. Both raised initial funding from angel investors. But when the market crashed in 2000, their paths diverged completely. The first entrepreneur, let's call him Marcus, had built a profitable software company serving small businesses. When the crash hit and venture capital dried up, Marcus made what seemed like the rational decision. He cut expenses, laid off staff, stopped all expansion plans, and focused entirely on protecting his existing revenue stream. He operated from scarcity. His brain was asking, "How do I survive this? How do I protect what I've built?" Every board meeting, Marcus presented conservative projections. He turned down partnership opportunities that seemed risky. He refused to invest in new product lines because he couldn't guarantee immediate returns. And here's what's critical. Marcus thought he was being smart. He thought he was being responsible. His investors praised his fiscal discipline. But here's what was actually happening in Marcus's brain. That scarcity mindset had activated his stress response. Cortisol was flooding his system. His prefrontal cortex, his strategic thinking center, was suppressed. He was in pure survival mode. And in that mode, he couldn't see what was about to happen. The second entrepreneur, I'll call her Sarah, faced the exact same market crash. Her company had similar revenue, similar burn rate, similar challenges. But Sarah made a radically different choice. Instead of contracting, she expanded. While everyone else was panicking, she went on a hiring spree, recruiting top engineers from failed startups at bargain prices. She negotiated aggressive deals with desperate vendors. She invested her remaining capital in building infrastructure that would scale. Her board thought she was insane. Her investors threatened to remove her. Her own team questioned whether she understood how serious the situation was. But Sarah wasn't operating from scarcity. She was operating from abundance. Her brain wasn't asking, how do I survive this? It was asking, how do I use this crisis to build something everyone else is too terrified to attempt? Here's what happened next. Marcus's company survived. It generated steady, modest profits for the next decade. He eventually sold it for $12 million, a success by any conventional measure. He became comfortable, financially secure. But Sarah's company, the one that seemed reckless, that seemed to violate every principle of conservative business management, that company became a $3 billion exit. Sarah's personal net worth exceeded $400 million. What separated them? Marcus had a scarcity mindset disguised as prudence. Sarah had an abundance mindset that looked like recklessness but was actually asymmetric thinking. She recognized that the downside was capped. She might fail, lose her company, start over. But the upside was theoretically unlimited if she was right about the opportunity in front of her. She was playing a completely different game, and here's what you need to understand. This same pattern repeats across every major wealth creation event in modern history. The people who build extraordinary wealth aren't necessarily smarter or luckier. They've made this cognitive shift from, how do I protect what I have, to, how do I deploy what I have to create exponentially more? Let me break down exactly how this works in the minds of billionaires. There are three core pillars to this thinking. Three frameworks that ultra-wealthy people use that fundamentally separate them from everyone else. And once you understand these frameworks, once you internalize them, you'll start seeing opportunities that are completely invisible to you right now. The first pillar is asymmetric risk-reward thinking. This is the foundation of every billion-dollar fortune. And most people completely misunderstand it. Here's how normal people think about risk. They see it as binary. Either I win big or I lose everything. Either this works or I'm ruined. That binary framing is what keeps most people trapped in mediocrity forever, because if you think every bet is all or nothing, you become paralyzed. You can't take action. Your fear of loss overwhelms any possibility of gain. But billionaires think about risk completely differently. They think asymmetrically. They look for situations where heads, they win, and tails, they don't lose much. They're searching for scenarios where the downside is capped, but the upside is unlimited. And once you understand this principle, you start evaluating every opportunity through a different lens. Jeff Bezos crystallized this in his 2015 shareholder letter. He wrote, "Given a 10% chance of 100 times payoff, you should take that bet every time, but you're still going to be wrong 9 times out of 10. Think about what he's saying. Most people hear 90% failure rate and immediately reject the opportunity. They focus on the 9 failures, but Bezos focuses on the 100 times payoff, because if you take 10 such bets and hit once, you've multiplied your wealth by 10 even while failing 9 times. That's asymmetric thinking. That's how billionaires actually allocate capital. When Bezos launched Amazon, he personally estimated a 70% probability of failure. He pitched 60 different investors. 38 said no, 22 said yes, and invested approximately $1 million total. Now here's the critical question. Were the 22 investors who said yes smarter than the 38 who said no? Did they have better market analysis? Superior business acumen? No. They had a different cognitive framework. The 38 who declined were thinking symmetrically. They saw a 70% chance of losing their investment and a 30% chance of making a return. That math didn't appeal to them. But the 22 who invested were thinking asymmetrically. They recognized that their downside was capped. They'd lose their investment, a specific dollar amount. But their upside was theoretically infinite. They weren't betting on certainty, they were betting on asymmetric potential. They were right. Amazon Web Services alone now generates over $70 billion in annual revenue. A product that started as an internal infrastructure solution. A product that didn't even exist in the original business plan. That's what asymmetric thinking creates. Warren Buffett built his entire $157.5 billion fortune on this exact principle. His first 2 rules of investing are famous. Rule 1, don't lose money. Rule 2, see Rule 1. Now, most people hear that and think Buffett is conservative, that he's risk-averse, that he plays it safe. They're completely wrong. Buffett isn't conservative, he's asymmetric. He looks for situations where the downside is minimal, while the upside is enormous. He searches for deeply undervalued companies trading below intrinsic value. Situations where he can't lose much, but might gain exponentially. And when he finds those situations, he bets aggressively. This is why Buffett buys when markets crash and everyone else panics. In 2008, when the entire financial system was collapsing, when every investor on earth was terrified, Buffett invested billions in Goldman Sachs and Bank of America. Why? Because his downside was protected. These companies weren't going to zero, but his upside was massive if they recovered. He was right. Those investments generated billions in returns. Buffett operates from abundance mentality precisely because he's protected his downside so carefully that he can be aggressive on the upside. He's never paralyzed by fear because he's structured his bets asymmetrically. That's the framework. That's the cognitive shift. Now I want you to pause and think about your own life right now. Think about the opportunities in front of you. Are you evaluating them symmetrically or asymmetrically? Are you asking, what's my probability of success? Or are you asking, what's my downside versus my upside? Because here's what happens when you make this shift. Opportunities that seemed insane suddenly become obvious. Bets that seemed reckless become rational. And you start taking action that compounds wealth instead of protecting mediocrity. If this is clicking for you, if you're starting to see how this changes everything, drop a comment right now and tell me, what's the one opportunity in your life right now that you've been too scared to pursue? What's the asymmetric bet you've been avoiding because you're focused on the probability of failure instead of the magnitude of potential success? I want to hear it. Because once you name it, once you frame it asymmetrically, your brain will start processing it differently. The second pillar of billionaire thinking is what I call opportunity mindset over scarcity protection. And this is where most people, even successful people, completely sabotage their wealth building. The scarcity mindset hoards what it has. The opportunity mindset deploys what it has to create more. Let me show you exactly what this looks like at the highest levels of wealth. 2006. Mark Zuckerberg is 22 years old. Facebook has been live for 2 years. The company is generating $30 million in revenue. And Yahoo offers him $1 billion to acquire the company. $1 billion at 22 years old. Most people can't even conceptualize that kind of wealth. Most entrepreneurs would have said yes immediately, locked in generational wealth, retired. But Zuckerberg said no. Then Viacom offered $1.5 billion. He said no again. Then Microsoft offered $15 billion. And again Zuckerberg declined. Now, was this because Zuckerberg knew with certainty that Facebook would become worth hundreds of billions? Was he operating from some privileged information that guaranteed success? Absolutely not. There was enormous uncertainty. Competitors were everywhere. The business model wasn't even clear yet. So why did he turn down offers that would have made him instantly, incomprehensibly wealthy? Because of his cognitive framework. Zuckerberg wasn't operating from scarcity thinking. He wasn't asking, how do I lock in this wealth and protect myself? He was operating from abundance thinking. He saw the billion-dollar offers as evidence, as data points proving that his vision had 100 times potential, while other entrepreneurs his age would have seen $1 billion as an unfathomable ceiling. Zuckerberg saw it as confirmation that he was building something that could be worth 100 billion. That's opportunity mindset. That's abundance thinking. And it's not about blind confidence or delusional optimism. It's about interpreting signals differently. Scarcity-minded people see big offers as endpoints. Opportunity-minded people see them as validation that they're on the right path. But here's what most people miss about Zuckerberg's story. His abundance mindset wasn't just about turning down offers. It was about how he deployed capital internally. In the early Facebook days, meetings were short, decisions were swift, and every second was purposeful. Why? Because Zuckerberg wasn't spending money recklessly. He was deploying capital ruthlessly toward future value creation. Most startup founders, when they raise money, they show off. They hire lots of people. They get fancy offices. They demonstrate success through visible spending. But Zuckerberg kept his team lean. He poured money into infrastructure and back-end systems that other founders would have cut. He invested in technical architecture that wouldn't pay off for years, because he was thinking 5 years ahead. He was investing every dollar in systems that would scale. That's the difference. Scarcity mindset says, we raised money, we need to show we're successful, let's hire and expand. Opportunity mindset says, we raised money, now we need to deploy it asymmetrically into the highest leverage investments, even if they're not visible. This pattern repeats across every major wealth creator. When they have capital, they don't protect it. They deploy it strategically toward asymmetric opportunities. And that deployment mindset is what creates exponential returns. Let me give you another example that perfectly illustrates this principle. Tyler Perry. His story demonstrates how the wealthiest people use scarcity constraints as fuel for opportunity thinking rather than as barriers. Tyler Perry grew up in extreme poverty. Abusive father, every disadvantage you can imagine. He lived in his car while trying to get his first play produced. That play lost money. By every conventional metric, Tyler Perry should have given up, should have concluded that he didn't have the resources, the connections, the background to succeed in entertainment. But Perry made a cognitive choice. Instead of thinking, I don't have resources so I can't succeed, he asked, what can I create with what I have? He wrote a play based on his own trauma recovery. He eventually got it produced, and it became enormously successful. But then, and this is the critical moment, Perry made a mindset shift that most people never make. Instead of licensing his plays and films to major studios, instead of taking the guaranteed money and letting others own the distribution, Perry decided to build his own studio infrastructure. Tyler Perry Studios. Now think about what that required. He had to sink capital into real estate, production equipment, entire facilities. The risk was enormous. He could have lost everything. But Perry was thinking asymmetrically. The downside was capped. He'd lose his investment and have to start over. But the upside was owning the entire value chain, owning the production, owning the distribution, keeping all the economics, instead of giving most of it away to intermediaries. Today, Tyler Perry Studios is a billion-dollar empire. Perry's personal net worth exceeds $400 million. And it happened because he refused to think from scarcity. Every time Perry faced a constraint, limited budget, limited access, limited resources, he reframed it as an opportunity. What can I do that big studios can't precisely because I have constraints? How can I turn my limitations into advantages? That's abundance thinking disguised as resourcefulness. And here's what you need to understand about your own situation right now. Whatever constraints you're facing, limited capital, limited connections, limited experience, those constraints are only barriers if you frame them as scarcity. But if you reframe them as creative fuel, as forcing functions for innovation, they become your competitive advantage. The third pillar is continuous learning and pattern recognition. And this is where the cognitive gap between ultra-wealthy people and everyone else becomes almost impossible to bridge unless you understand what's actually happening. Opportunity-oriented minds are always scanning for patterns that scarcity-minded people miss because they're too anxious to notice. Let me show you exactly how this works. 2014. Satya Nadella becomes CEO of Microsoft. At that moment, Microsoft is seen as stagnant, losing to Google, losing to Amazon. The company that dominated computing for decades is now viewed as a dinosaur. Analysts are writing Microsoft off. The stock is flat. The culture is toxic. And Nadella inherits this mess. What does he do? He makes a seemingly subtle but radically important mindset shift. He transforms Microsoft's culture from what he called know-it-alls to learn-it-alls. Now, that sounds like corporate speak. That sounds like the kind of platitude you'd see on a motivational poster. But what Nadella actually did was implement a fundamental cognitive reorientation aligned with growth mindset research. Growth mindset is the concept that abilities can be developed through effort rather than being fixed traits. When you operate from a fixed mindset, you believe your intelligence and capabilities are static. You avoid challenges because failure would expose your limitations. But when you operate from a growth mindset, you believe your abilities can expand. You seek challenges because they're opportunities to develop new capacities. Nadella didn't just talk about this, he restructured the entire organization around it. He changed how performance was evaluated, how teams collaborated, how decisions were made. And the results were staggering. In just 4 years, Microsoft's valuation tripled. Analysts predicted it would become the first trillion-dollar company. And it did. Why did this work? Because when your organization operates in learning mode rather than protecting what we know mode, it constantly recognizes opportunities. Opportunities in cloud computing that the old Microsoft would have dismissed because it didn't fit the Windows monopoly. Opportunities in artificial intelligence. Opportunities in partnerships with competitors that the old Microsoft would have rejected out of pride. Nadella shifted the company from a scarcity frame, how do we protect our Windows monopoly, to an abundance frame, what new value can we create? And that single cognitive reorientation created hundreds of billions in market value. Now, here's the critical insight. This isn't just about corporate culture. This is about how your individual brain processes information. When you're in protective mode, in scarcity mode, your pattern recognition shuts down. You're so focused on defending your existing position that you can't see adjacent opportunities. But when you're in learning mode, your brain becomes a pattern detection machine. You start connecting dots that others miss. You see opportunities hidden in data that anxious people overlook. You recognize market shifts before they become obvious. Why? Because your prefrontal cortex is active instead of suppressed. Your dopamine system is engaged. You're neurologically optimized for opportunity recognition. Let me give you a concrete example of how this plays out. Jack Ma founded Alibaba with no venture capital, no cutting-edge technology, a small team working from a tiny apartment. By conventional scarcity metrics, Alibaba should have failed immediately. How do you compete against eBay when they have hundreds of millions in funding and you're working from someone's living room? But Ma operated from a different cognitive paradigm, his famous quote, "It's not about resources, it's about being resourceful." What does that mean in practice? It means instead of asking, "How do I compete against eBay?" Ma asked, "What if the real opportunity is to serve small businesses that traditional e-commerce platforms ignore?" That reframe, that pattern recognition, changed everything. Ma wasn't competing on eBay's terms. He was creating new value in a new market. He identified an asymmetric opportunity that only existed because he had constraints. eBay was optimized for Western markets, for individual sellers, for existing payment infrastructure. Ma built for Chinese small businesses, for wholesale transactions, for entirely different infrastructure. Today, Alibaba is worth hundreds of billions. And it happened because Ma's brain was in learning mode, in pattern recognition mode, instead of protective mode. He saw an opportunity that was literally invisible to better-funded competitors because they were thinking from abundance of resources. Ma was thinking from abundance of possibilities, if you're following what I'm saying here. If you're starting to recognize how these 3 pillars, asymmetric thinking, opportunity deployment, and continuous learning, create a fundamentally different way of processing the world, then you're already ahead of 99% of people. But understanding this intellectually is not enough. You have to rewire your brain. You have to practice these frameworks until they become automatic. And if you want me to break down exactly how to do that, if you want the specific exercises and practices that literally change your neural pathways, make sure you're subscribed because that's what I'm covering in the next video. The actual neuroplasticity protocols that transform your cognitive patterns. Hit that subscribe button now. Let me show you what this looks like in real time across the most successful wealth builders in history. Because understanding the theory is one thing. Seeing the pattern play out across multiple case studies is what makes it click. Warren Buffett's wealth journey reveals something that seems impossible when you first hear it. Nearly 90% of his current $157.5 billion net worth was accumulated after age 60. Think about that. How does someone become far richer in their 60s, 70s, and 80s than they were in their 20s, 30s, 40s, and 50s combined? The answer is compounding wealth, combined with an abundance mentality that gets stronger with time. Buffett began investing as a child. He bought his first stock at age 11. But the critical factor wasn't just that he started early, it was that he continuously reinvested profits rather than spending them. He allowed compound interest to multiply exponentially. But here's what people miss. The math of compounding only works if you have the mindset to let it work. Most people, when they start accumulating wealth, their scarcity mindset kicks in and they start spending. They upgrade their lifestyle. They buy the bigger house, the nicer car, the luxury vacations, because their scarcity mindset interprets wealth as, finally, I have enough to enjoy. But Buffett never did that. His mindset was always, how can I redeploy this to create more value? He still lives in the house he bought in 1958 for $31,500. He's worth over $150 billion, and he lives in a modest house in Omaha. Why? Because his abundance mindset isn't about consumption, it's about compounding opportunity. Even at extreme wealth, when most billionaires retire and start spending down their fortunes, Buffett remained in continuous opportunity scan mode. This is why he identified the 2008 financial crisis as a buying opportunity while everyone else panicked. When the entire world was in scarcity mode, terrified of losing everything, Buffett was in abundance mode asking, how can I deploy capital asymmetrically right now? That mindset persistence is what created 90% of his wealth after age 60. It's not that opportunities suddenly appeared in his later life. It's that compounding finally reached the exponential part of the curve, and his mindset was still optimized to take advantage of it. Most people never experience that exponential curve. They tap out early. They shift into protective mode. They stop seeing opportunities because their brains have shifted from growth to preservation. That shift, that cognitive transition from builder to protector, is what caps their wealth forever. Now let's look at Jeff Bezos, because his journey illustrates a different but equally important pattern. Bezos founded Amazon with a 30% confidence level in the business model. That means he assessed his own venture and concluded there was a 70% probability it would fail. Most people would never start a business with that assessment. They'd see 70% failure odds and conclude it's not worth the risk. But Bezos framed it asymmetrically. The capital required was modest relative to his potential upside. Failure wouldn't destroy his life, but success would transform it. So the expected value of the bet was massively positive, even with high failure probability. He famously tells investors, outsized returns often come from betting against conventional wisdom, and conventional wisdom is usually right. Think about what he's saying there. He's acknowledging that most contrarian bets fail. Conventional wisdom is usually correct. But the few times conventional wisdom is wrong, the few times the contrarian bet succeeds, the returns are so enormous they compensate for all the failures. That's asymmetric thinking at the highest level. And what's critical is that this mentality didn't change when Amazon became successful. Bezos repeatedly bet the company's resources on projects where failure was likely, but the payoff, if successful, would be transformational. Amazon Web Services, the Kindle, Amazon Prime. Each of these represented enormous risk. Each diverted resources from the core business. Each had high probability of failure. Most businesses would view these as dangerous distractions, but Bezos viewed them as asymmetric opportunities. Low probability of success in emerging categories, but if they succeeded, they'd be worth more than the entire original business. He was right about all three. AWS is now more profitable than Amazon's entire e-commerce operation. The Kindle revolutionized publishing. Prime created a subscription model that generates tens of billions in recurring revenue. And all three started as asymmetric bets that conventional thinking said were too risky. That pattern, making asymmetric bets continuously, not just once, is what separates sustained wealth builders from one-hit wonders. Bezos didn't get lucky once. He systematically took asymmetric positions over and over. Most failed, but the ones that succeeded created exponential value. Now let me tell you about Oprah, because her journey represents something even more powerful. It shows how this mindset creates wealth regardless of starting conditions. Oprah was born into poverty, sexually abused as a child, assaulted repeatedly. Every trauma, every disadvantage you can imagine. By any reasonable assessment, Oprah should have remained locked in scarcity consciousness for life. Childhood trauma literally rewires your brain toward threat detection and survival mode. The neuroscience is clear on this, but Oprah made an active mindset choice. She reframed her entire relationship with her past. Instead of viewing her trauma as evidence that the world was dangerous and resources were scarce, she viewed it as material for connection and service. That reframe, that cognitive choice, changed everything. When she was offered $1 billion to sell her network, she recognized it as evidence of value, not as the ceiling of what could be created. She didn't think, I finally have enough to be safe. She thought, this proves I'm building something even more valuable. More importantly, Oprah reframed her entire relationship with wealth itself. She shifted from, how do I protect myself from poverty, to, how do I use my platform to serve something greater than myself? Now, this isn't altruism over profit. This is the recognition that serving others at scale creates more wealth than hoarding resources. Today, Oprah's net worth exceeds $2.5 billion. She became a billionaire not despite her service mindset, but because of it. Because when you're focused on creating value for others, you spot opportunities that self-protective people miss. You build trust that enables deals others can't access. You create networks that compound over time. Her abundance mindset, formed as a deliberate choice despite every reason to be in scarcity mode, is what created generational wealth. That's the power of this cognitive shift. It doesn't matter where you start. It matters how you frame what you're building. Steve Jobs exemplified another critical pattern in this mindset. He showed how opportunity-minded people frame challenges as creative constraints rather than limitations. When Jobs returned to Apple in 1997, the company was near bankruptcy. They had 90 days of cash, multiple product lines, no clear strategy, complete chaos. His first action wasn't to restore what was lost. It was to slash the product line by 70%. He cut everything that wasn't essential. Why would you do that in a crisis? Why reduce your options when you're desperate? Because constraints force focus, and focus creates clarity about what matters. Jobs understood something that scarcity-minded leaders miss. More options feels safe, but actually dilutes execution. Fewer options feels risky, but actually concentrates resources on asymmetric opportunities. Jobs' fundamental mindset was, innovation stems from saying no to 1,000 things. He didn't see resource constraints as limiting creativity. He saw them as forcing the kind of radical simplicity that creates iconic products. The iPhone, iPod, and iPad were all born from constraint-driven thinking. What if we made something so simple and elegant that it required fewer resources to develop than our competitors spent on bloated feature sets? That mindset, constraints as advantages rather than limitations, allowed Apple to compete against companies with more capital, more engineers, more resources. Because while competitors were spreading resources across dozens of products, Apple was concentrating everything on a few asymmetric bets. When one succeeded, it created exponential value. This pattern shows up everywhere in Jobs' career. He got fired from Apple in 1985. That could have been the end. Most people would have become bitter, protective, cautious. But Jobs reframed it as an opportunity. He started Next and Pixar. Both ventures taught him lessons that he later applied when he returned to Apple. The failure of getting fired became the constraint that forced him to develop the skills that later created the most valuable company on earth. That's abundance mindset at its purest. Every setback is reframed as data, as learning, as preparation for future opportunity. Nothing is wasted. Everything compounds. Now I want to address something critical. Because if you're listening to these stories and thinking, sure, but these are exceptional people, this doesn't apply to me, you're missing the entire point. This mindset shift isn't a character trait you're born with. It's a trainable cognitive capacity. Neuroplasticity research proves that deliberate practice literally rewires your brain's neural pathways. The shift happens when you start implementing specific frameworks. Let me break down exactly how to activate this in your own life, because this is where theory becomes practice. First framework: reframe scarcity as constraint, not ceiling. Jack Ma spent years operating with virtually no capital. Instead of seeing this as proof he couldn't succeed, he asked, "What can only happen because I have limited resources?" That question is transformative, because constraints force creativity. When you have unlimited resources, you can throw money at problems. You don't have to think deeply. But when you have constraints, you're forced to find elegant solutions. You're forced to identify leverage points. You're forced to think asymmetrically. This is why some of the most valuable companies were started during recessions. Why some of the greatest innovations came from garages and basements. Not because poverty is noble, but because constraints force the kind of resourcefulness that abundance makes optional. Right now, whatever constraint you're facing, limited capital, limited time, limited connections, ask yourself, what opportunity exists precisely because I have this constraint? What can I do that better resourced competitors can't because they're not forced to be creative? That reframe activates abundance thinking, even in constrained circumstances. Second framework: stop thinking in probabilities, think in expected value. This is the most mathematically important shift you can make. Expected value is probability times payoff. A 10% chance of 100 times return has an expected value of 10 times your investment. That's massively positive expected value, even though you'll probably fail. But most people intuitively weight probability too heavily and payoff too lightly. They hear 10% chance and immediately dismiss the opportunity. They don't multiply by the payoff. This is a cognitive error that costs people millions. Start calculating expected value explicitly. When you evaluate an opportunity, don't just ask, "What's my chance of success?" Ask, "What's my chance of success times my potential return if I succeed, minus my probability of failure times what I lose if I fail?" That calculation gives you expected value. And if expected value is positive, you should take the bet even if probability of success is low. This is how Bezos evaluated Amazon. This is how every successful venture capitalist evaluates investments. This is how Buffett evaluates stocks. Expected value, not probability alone. Third framework: protect your downside ruthlessly, then be aggressive on upside. This is Buffett's entire philosophy compressed into one principle. Most people think you're either conservative or aggressive. Either you play it safe or you take big risks. But that's binary thinking. Asymmetric thinking says you protect downside and take aggressive upside simultaneously. How? By structuring bets where your loss is capped, but your gain is unlimited. By finding situations where you can't lose much but might win exponentially. By being paranoid about permanent capital loss but opportunistic about asymmetric returns. In practice, this means don't bet money you can't afford to lose. Don't put yourself in positions where failure means ruin. But within that boundary, within the realm of capped downside, be extremely aggressive in pursuing asymmetric opportunities. Buffett can make billion-dollar bets precisely because he's structured them so failure won't destroy Berkshire Hathaway. His downside is always protected. That protection is what enables his aggression. Most people get this backward. They think protection means timidity. But protection enables aggression by removing existential risk. Fourth framework: adopt continuous learning as an identity. This is what Nadella did at Microsoft, and it's what separates growth-oriented people from fixed-mindset people. If you believe your abilities are fixed, You avoid challenges that might expose your limitations. You stay in your comfort zone. You defend your existing knowledge rather than expanding it. But if you adopt learning as identity, if you define yourself as someone who is constantly developing new capacities, you seek challenges. You view confusion as opportunity. You see gaps in your knowledge as exciting rather than threatening. This isn't about taking courses or reading books, though those can help. It's about cognitive orientation. Do you approach every situation asking, how do I apply what I already know? Or, what can I learn that I don't know yet? That distinction is everything. When your brain is in learning mode, you're scanning for patterns constantly. You're connecting information across domains. You're building mental models that reveal opportunities others miss. Your pattern recognition becomes superhuman, not because you're smarter, but because you're actively training the neural networks that detect novelty and possibility. Fifth framework, and this is the one that ties everything together. Stop asking, can I afford it? And start asking, how can I afford it? This is the clearest linguistic marker of the cognitive shift between scarcity and abundance. Can I afford it? Is a yes or no question. It shuts down your problem-solving brain. It either confirms you have resources or confirms you don't. Dead end. But how can I afford it? Is an open question. It activates your prefrontal cortex. It forces creative thinking. It assumes the answer exists and challenges you to find it. How can I structure this deal? How can I find partners? How can I sequence this differently? How can I use leverage? That single linguistic reframe from whether to how changes which neural pathways activate in your brain. And over time, that reframe becomes automatic. You stop encountering dead ends and start encountering puzzles to solve. These 5 frameworks aren't theoretical. They're practical cognitive tools that literally rewire your neural pathways when practiced consistently. And the research on neuroplasticity is overwhelmingly clear. Your brain remains plastic, remains changeable throughout your entire life. You can make this shift at any age. But here's what you need to understand about the cost of not making this shift. Because most people, even successful ones, never make this cognitive transition. And the price they pay is staggering. Most people build wealth through income and savings. They work hard, they earn money, they save a portion, and over time, their net worth grows. That's linear growth. You trade time for money, money accumulates at a steady rate, and eventually you have a comfortable retirement. But the billionaires I've been describing, they made the shift from linear thinking to exponential thinking. They stopped trading time for money and started deploying capital asymmetrically to generate disproportionate returns. That shift is what creates the exponential curve. Warren Buffett accumulating 90% of his wealth after age 60 isn't an outlier. It's what compounding creates when combined with abundance thinking over decades. The exponential curve doesn't kick in immediately. For years it looks linear. But if you maintain the mindset, if you keep reinvesting asymmetrically, if you never shift into protective mode, eventually the curve goes vertical. Most people never get to experience that exponential phase. They tap out early. They shift to protection mode in their 40s or 50s. They say, I've accumulated enough, now I need to preserve it. And the moment they make that shift, they cap their wealth forever. They never experience the exponential phase where 90% of wealth is created. That's the financial cost. But there's a deeper cost that's harder to quantify. People locked in scarcity mindset experience chronic stress. Their cortisol levels are elevated. Their health deteriorates. They miss opportunities that are literally invisible to their fear-activated brains. They make decisions based on avoiding loss rather than creating value. And they transmit that limitation consciousness to their children and colleagues. Scarcity mindset is contagious. When you're in protective mode, everyone around you absorbs that frame. Your kids learn to think small. Your employees learn to avoid risk. Your network starts reflecting your constraints back to you. The abundance mindset, by contrast, creates resilience. When you're focused on opportunities rather than threats, you're more adaptable. You handle setbacks better because you frame them as data rather than disasters. You build networks of optimistic, growth-oriented people who compound your opportunities. You create environments where innovation flourishes. And here's what's fascinating. The research shows that abundance mindset doesn't just create wealth. It creates health, longevity, relationship quality, life satisfaction. Because when your brain isn't flooded with stress hormones, when your prefrontal cortex is active instead of suppressed, you make better decisions in every domain. The scarcity mindset creates a vicious cycle. Stress reduces cognitive capacity, which reduces your ability to recognize opportunities, which creates more stress. But the abundance mindset creates a virtuous cycle. Optimism enhances pattern recognition, which reveals opportunities, which generates success, which reinforces optimism. That's why this shift matters so profoundly. It's not just about money, it's about the quality of your cognitive experience. It's about whether you spend your life in fear-driven reaction mode or opportunity-driven creation mode. Now let me show you one more pattern that brings all of this together, because this is where the neurological shift becomes undeniable. Remember the story I told you at the beginning about Marcus and Sarah, the two entrepreneurs during the dot-com crash? Let me tell you what happened to their brains during that crisis. When the market crashed, Marcus's scarcity response activated his amygdala. Brain imaging studies show that when people experience financial threat, the amygdala lights up and the prefrontal cortex dims. Marcus was literally seeing the world through a fear filter. Every decision was processed through threat assessment. Every opportunity looked like a potential loss. His board meetings became exercises in risk avoidance. He'd present conservative scenarios, and everyone would agree they were being prudent. But what was actually happening was collective scarcity thinking. The entire organization's decision-making capacity was suppressed because everyone's fear centers were activated. Sarah's brain was processing the same crisis completely differently. Brain imaging studies also show that when people with abundance mindset encounter challenges, their anterior cingulate cortex activates, the region responsible for error detection and course correction. Sarah wasn't in denial about the crisis. She was actively processing what was wrong and how to adapt. More importantly, her prefrontal cortex remained active. She could think strategically. She could plan long-term. She could evaluate complex trade-offs. Her dopamine system was engaged, which meant she experienced motivation rather than paralysis. She saw the same market data as Marcus, but her brain extracted different meaning from it. Marcus's brain was asking, "How do I avoid loss?" Sarah's brain was asking, "How do I adapt to create value?" Those questions activate completely different neural pathways, and those pathways produce completely different behaviors, which produce completely different outcomes. Here's the pattern that shows up everywhere. Wealth creators have trained their brains to remain in executive function mode, even during crisis. They've developed what neuroscientists call cognitive reappraisal, the ability to reframe threats as challenges. And that capacity is trainable. Studies show that people who practice cognitive reappraisal regularly, who deliberately reframe negative situations, actually change their brain structure over time. The prefrontal cortex becomes more active and better connected to the amygdala. Essentially, your executive function gains more control over your fear response. That's not metaphorical. That's measurable neuroscience. You can literally rewire your brain to operate from abundance instead of scarcity. But it requires practice. It requires consistently catching yourself in scarcity thinking and deliberately reframing. Every time you encounter a setback and your first thought is, "I'm losing what I have, yay," you pause. You notice that thought, and you ask, what opportunity exists because this happened? That deliberate reframe, practiced hundreds of times, changes your neural wiring. Every time you encounter an opportunity and your first thought is, "I can't afford it," you pause, you notice that thought, and you ask, "How can I afford it?" That linguistic reframe activates different neural pathways. Over time, the new pathway becomes automatic. This is exactly what every billionaire I've described has done. They've trained their brains to default to opportunity framing instead of threat framing. And the compounded result of that training, across thousands of decisions over decades, is what creates billion-dollar fortunes. Now I want to address the elephant in the room. Some of you are thinking, "This sounds great, but I have real constraints. I have real financial pressures. I can't just think abundantly when I'm struggling to pay rent." That's a completely valid concern, And I'm not going to tell you to ignore reality or think positive thoughts while your situation deteriorates. That would be delusional. But here's what I am saying. Your constraints are real, but your interpretation of those constraints determines everything. When Tyler Perry was living in his car, his constraints were absolutely real. He was broke. He had no connections. His play had failed. Those were facts. But his interpretation of those facts, his cognitive frame, determined his trajectory. He could have interpreted his situation as, I don't have resources, therefore I can't succeed. That's a scarcity frame based on accurate facts. Or he could interpret his situation as, I have constraints that force creativity. What can I create that others can't precisely? Because I'm operating from limitation. That's an abundance frame based on the exact same facts. The facts don't change. The opportunities available don't change. But the opportunities you can perceive, the opportunities your brain is neurologically capable of recognizing, those change completely based on your frame. So yes, acknowledge your constraints, be realistic about your situation, but then ask the critical question, given these constraints, what opportunity exists that I wouldn't see if I had unlimited resources? Because the answer to that question is where asymmetric value lives. Some of the most valuable business models were built by people with severe constraints who asked that question. Dollar Shave Club was started by someone who couldn't afford traditional marketing, so they made a viral video for $4,000 that generated millions in sales. That constraint, no marketing budget, forced creativity that created more value than a huge budget would have. Spanx was started by Sarah Blakely, with $5,000 because she couldn't get anyone to manufacture her product, so she convinced a hosiery mill owner to produce it. That constraint, no manufacturer, forced her to pitch so compellingly that she created her entire supply chain from scratch. Today, she's a billionaire. Your constraints are not evidence that you can't succeed. They're inputs that determine what kind of value you'll create and how you'll create it. The question is whether you frame them as ceilings or as creative forcing functions. If you're starting to see opportunities in your own life that you couldn't see before, if this cognitive shift is happening for you right now, I want to hear about it. Drop a comment and tell me, what's the one constraint in your life right now that you've been viewing as a limitation that you could reframe as a creative advantage? Because the moment you name it and reframe it publicly, your brain will start working on it differently. Let me give you one final pattern that synthesizes everything I've covered, because this is the pattern that, once you see it, you can't unsee it, and it will change how you evaluate every opportunity for the rest of your life. The pattern is this: every major wealth creation event in modern history happened because someone identified an asymmetric opportunity that was invisible to everyone else, precisely because everyone else was thinking from scarcity. The internet boom. Every successful internet company was started by someone who saw asymmetric opportunity, while everyone else saw uncertainty and risk. Amazon, Google, Facebook, Netflix, every one of them was an asymmetric bet that most people rejected. The mobile revolution. Apple's iPhone was an asymmetric bet. Every phone manufacturer had more resources, more distribution, more industry expertise. But they were thinking from scarcity, protecting their existing business models. Jobs was thinking from abundance. What if we create entirely new value, even if it disrupts our existing products? The cloud computing revolution. AWS was an asymmetric bet. Amazon was an e-commerce company. Why would they build enterprise infrastructure? Because Bezos saw opportunity where others saw distraction. Today, AWS is worth more than Amazon's entire retail operation. The cryptocurrency boom. Bitcoin was an asymmetric bet. Most economists rejected it. Most investors avoided it. But people who understood asymmetric risk-reward saw that the downside was losing a small investment, while the upside was potentially unlimited if it became a new asset class. Every single one of these wealth creation events followed the same pattern. Someone with abundance mindset identified an opportunity. Most people with scarcity mindset rejected it because they focused on probability of failure. The abundance-minded person took the asymmetric bet, and the result was exponential wealth. This pattern will repeat in the future. There are asymmetric opportunities available right now that most people can't see because they're thinking from scarcity. Artificial intelligence, biotechnology, clean energy, decentralized finance. Every emerging category has asymmetric opportunities, but you won't see them if your brain is in protective mode. You won't recognize them if you're focused on avoiding loss. You'll only see them if you've made the cognitive shift I've been describing. If you've trained your brain to scan for asymmetric upside instead of obsessing about downside. And here's what I want you to understand. This shift isn't about gambling. It's not about being reckless. It's about being strategic. Buffett protects his downside more carefully than almost any investor in history. But that protection is what enables him to be aggressive on asymmetric upside. The scarcity mindset thinks, I can't afford to lose, therefore I can't take risks. The abundance mindset thinks, I can't afford to lose, therefore I structure opportunities, so I can't lose much but might gain exponentially. And same starting premise, completely different conclusion. That's the shift. That's the cognitive reorientation that creates wealth. And it's available to you right now if you're willing to rewire your thinking. Now, we're approaching the end of this deep dive, but before I close, I want to make sure you understand the immediate action you need to take. Because knowledge without action is just entertainment. And I'm not here to entertain you. I'm here to change how you think about wealth. First action. Identify one opportunity in your life right now where you've been focused on probability of failure instead of magnitude of potential success. It might be a business idea, it might be an investment, it might be a career move. Whatever it is, write it down. Then calculate the actual expected value. What's your realistic downside? What's your potential upside? What's the probability-weighted outcome? Most of the time, when you do this calculation honestly, you'll discover that opportunities you've been avoiding actually have positive expected value. You've been rejecting them because of cognitive bias, not because of rational analysis. That recognition alone will change your decision-making. Second action. Identify one constraint in your life that you've been viewing as a limitation. Then reframe it. Ask yourself, what opportunity exists because I have this constraint? Write down 5 answers. Force yourself to generate 5 ways this constraint could be an advantage. This exercise literally rewires your neural pathways. It trains your brain to look for opportunity and challenge. Third action. Commit to 1 month of cognitive reappraisal practice. Every time you catch yourself thinking from scarcity, I can't afford it, I might lose what I have. This is too risky. Pause. Notice the thought, then deliberately reframe it. How can I afford it? What could I gain? How can I structure this asymmetrically? Do this every day for 30 days. Your brain will change measurably. These 3 actions, expected value calculation, constraint reframing, and cognitive reappraisal practice, are the foundation of the mindset shift I've been describing. They're not complicated, but they're transformative if practiced consistently. Now here's what you need to understand about timing. The cognitive shift I've described doesn't happen overnight. Neuroplasticity takes time. You won't wake up tomorrow with a completely different mindset. But if you practice these frameworks consistently, if you deliberately catch yourself in scarcity, thinking and reframe to abundance, thinking hundreds of times over the next few months, your default cognitive patterns will change. And when that happens, when abundance thinking becomes automatic instead of effortful, that's when opportunities start appearing everywhere. It's not that new opportunities are being created, it's that your brain is finally capable of recognizing the opportunities that were always there. That's what happened to every billionaire I've described. They trained their brains to see differently. And once that training reached automaticity, once it became their default cognitive mode, wealth creation became almost inevitable, because they were playing a completely different game than everyone else. Most people are playing the game of, how do I protect what I have? Billionaires are playing the game of, how do I deploy what I have asymmetrically to create exponentially more? Same resources, completely different games, completely different outcomes. And the choice of which game you play, that's determined by your cognitive frame, by whether you've made the shift from scarcity to abundance, by whether you've trained your brain to see threats or opportunities. The research on this is overwhelming. Multiple studies across neuroscience, behavioral economics, and cognitive psychology all point to the same conclusion. The one mental shift that matters most isn't working harder, being smarter, or having better luck. It's reorienting your brain from scarcity protection to abundance opportunity framing, specifically through asymmetric risk thinking. That shift is what separates those who build generational wealth from those who trade time for money forever. That shift is what separates those who compound exponential returns from those who accumulate linear savings. That shift is what separates billionaires from everyone else. And that shift is completely within your control. It's not about your starting resources. It's not about your background. It's not about your circumstances. It's about your cognitive frame. It's about how your brain processes risk, opportunity, and potential. You can make this shift. You can rewire your neural pathways. You can train your brain to operate from abundance instead of scarcity. But you have to commit to the practice. You have to catch yourself in old patterns and deliberately create new ones. You have to be relentless about reframing scarcity thoughts into opportunity questions. If you do that, if you practice these frameworks consistently over the next 6 months, your life will change in ways you can't currently imagine. Not because I'm promising magic, but because when your brain shifts from scarcity to abundance, you literally start seeing opportunities that are invisible to your current cognitive frame. Those opportunities are out there right now. Asymmetric bets with capped downside and unlimited upside. Constraints that could be reframed as creative advantages, patterns that reveal where value will be created next. But you won't see them until you make the cognitive shift. So here's my challenge to you. For the next 30 days, practice the frameworks I've given you. Expected value thinking instead of probability obsession. Opportunity deployment instead of resource hoarding. Continuous learning instead of knowledge protection. Constraint reframing instead of limitation acceptance. How can I instead of can I? Practice those frameworks every single day. And watch what happens. Watch how opportunities start appearing. Watch how your stress decreases even as you take bigger bets. Watch how people start seeing you differently because you're operating from a completely different frame. That's the shift, that's the cognitive reorientation that creates wealth. And it starts right now with the decision to think differently. The billionaires I've described, Buffett, Bezos, Zuckerberg, Oprah, Perry, Ma, Jobs, they all made this shift. They all trained their brains to operate from abundance instead of scarcity. They all learned to think asymmetrically instead of binary, and the compounded result of that cognitive training across thousands of decisions over decades is what created their extraordinary wealth. You have access to the same frameworks, the same cognitive tools, the same neuroplasticity that allows your brain to change. The question is whether you'll use them, whether you'll commit to the practice, whether you'll make the shift, because here's the truth. Most people will watch this video, understand everything I've said, agree that it makes sense, and then do nothing. They'll go back to their default patterns, back to scarcity thinking, back to protective mode, and their wealth trajectory will remain exactly the same, but a small percentage, maybe 5%, will actually implement these frameworks, will actually practice cognitive reappraisal, will actually reframe their constraints and calculate expected value and ask how can I instead of can I. And those 5% will create dramatically different outcomes over the next decade. Which group will you be in? That choice, that decision about whether to actually implement what you've learned, that's the real test of mindset. Because abundance thinking isn't just about believing you can succeed. It's about taking action even when the outcome is uncertain. It's about deploying your resources asymmetrically even when most people think you're being reckless. It's about continuously learning even when you're already successful. That's the cognitive shift. That's the mindset that creates wealth fast. And it's available to you right now. If this has been valuable, if this cognitive framework has shifted something in how you think about opportunity, make sure you're subscribed to this channel. Because next week, I'm breaking down the specific neuroplasticity protocols that accelerate this shift. The exact practices that literally change your brain structure. The daily exercises that transform your cognitive patterns in weeks instead of years. That's content you can't afford to miss if you're serious about making this transformation. So hit that subscribe button. Share this video with someone who needs to hear it. someone who's stuck in scarcity thinking and doesn't realize it. Because the greatest gift you can give someone is a cognitive framework that changes their life trajectory. This is William Vanderbilt. Remember, the wealth you're seeking isn't out there waiting to be found. It's in here, in how you process opportunity. Change your mindset, change your wealth. I'll see you in the next one.